and 75-year-old male back pain.
Egon, good to be back sitting with you, chatting again, as always. It's always...
Welcome to Zurich.
Well, thank you very much. Thank you very much. We have to talk about the world around us because every day it seems to be getting a little bit crazier. And I want to start with this idea of negative interest rates because it's so important, and you know we're now looking at President Trump getting ready to run a re-election campaign, essentially putting pressure on the Federal Reserve openly to give him, as he said it, some of this free money, some of this zero money. You know, I want some of that money. And people are starting to applaud and clap and cheer when he says this stuff. How dangerous is this for people who have savings?
Well, for the people who are saving, it means that it's not worth saving. And since it's not worth saving, you can't invest either, because if you in the old theories, when you actually use savings equal investments, and that means that people had to save for the economy to grow and to invest. Now it's a totally different theory. We've broken all laws of nature, all laws of supply and demand by just printing money and now also making it absolutely free. So you print money first, and that is free in itself. You print money out of thin air, and then you make it free. So, which means that all this money is totally worthless. You know, this has been my theory for quite a long time, and I see where it's going. If the money has no value, then that means that the assets that this money support has no value either, or a much lower value than they're at now. And this is why we in the next few years are going to see an implosion of debt at some point, and an implosion of the assets that this debt has supported. And you know, in the meantime, yes, savers are going to suffer dramatically because they can't earn any money, and it's not worth saving. And then you have pension funds, mean that they're not going to get any returns. Pensioners are not actually going to get their pensions in the next few years, in my view. Also, as you know, pension funds have three main assets, which is stocks, bonds, and property, and a few alternative investments. These three assets are what we have talked about, you and I, many times, and what you talked about in your presentation also. I mean, these are bubble assets. And these are all assets, as stocks and the bonds and the property, that are going to crash at some point. It will probably stop, as I see it, with the stock market crash, and then eventually, we talked about negative interest rates, and Trump now talking about pushing them down to also negative, and putting pressure on the Fed. That means that we've had 17 trillion, now we have 13 trillion in negative interest rates. But that is probably increase. If the US does it, you're going to get tens of trillions added to that. I don't know if they will actually achieve that, because the biggest risk in the world to me is the debt and the implosion of the debt.
So what is it that is difficult, do you think, for the average person to understand about this? Because it's clear that you can't just print money and hand it out. I mean, that should be instinctively obvious to everybody, because we have all grown up in a world, at least, where you have to work to be paid a salary. Yeah. Obviously, we're seeing the other end of the pendulum here, and in the US, we're talking a lot about socialist type policies in the run-up to the next election. We're seeing universal basic income being touted as an idea here in Europe. We're seeing modern monetary theory, which essentially says that governments can print as much money as they want, as long as there's no inflation. Is this just the pendulum getting too far one way? And if so, how does that begin to swing back the other way? How do people start to understand what's going on here?
Well, sadly, people are never going to understand it. As we said, savers, it's no use saving, so people are borrowing instead. So most people have debt, because saving, that's gone out of fashion totally, because you can't, as I said, get any return. So people are now borrowing money instead. They're borrowing on credit cards, they're borrowing on car loans, they're borrowing on student loans, they're borrowing on their houses. You take here in Zurich, I mean, housing is incredibly expensive. And you know why? You do know why, because it's because of the interest rate. You can borrow 10-year money here at 1%. 10 years at 1%. I mean, that's free money. You know, it's like, you know, you don't even count the cost of the money. So that means that if the bank is willing to lend you a big multiple of your income, you can buy a very expensive house. You buy a house for a million Swiss francs, and you only pay, and that you don't get much for that in Zurich.
Right.
But if you pay a million Swiss francs, you pay for a house. It's 10,000 interest per year.
Yeah.
But then but the rental market is such, so that house would still, or that apartment would cost you 30,000 at least in rent, or 35,000.
Yeah.
So you see, there's already an imbalance. Something is wrong there. You can't have if you rent and pay 30,000 and pay 10,000 if you buy. So people sadly, how is this going to swing back? It's not going to swing back, sadly, not in an orderly way, because you take the US, for example. US debt has gone up. When Reagan came to power in 1981, it was 1 trillion, and now it's 23 trillion.
Yep.
It's gone up 23 times, and now it's increasing a lot faster. It'll probably increase by a couple of trillion in the next few years per year. And then you have tax revenue, which has gone up from 0.6 trillion to 3.5 trillion. So tax revenue has gone up 6 times, and debt has gone up 23 times. So how do you think this debt is ever going to be repaid? Well, it's not. We know that. So we're going to end up with a debt which will be a lot, greater than the world can cope with. We have already, and it's going to end badly.
But people will say that, well, I mean, it hasn't mattered here. It hasn't mattered to this point. It's gone up 23 times. Can it go up another 23 times? And what is it ultimately, do you think, that will cause reality to return and economic gravity?
When will the first little boy shout, the emperor has no clothes? That's the question. Because it's only confidence that is, and confidence is really propaganda from the authorities, from the elite, from the central bankers, etc. People don't have any confidence. The normal people don't have the confidence because they don't understand it, and secondly, all they have is debt that they can never repay. In my view, what's going to change is the sheer weight of the debt. At some point, you cannot break the laws of nature forever. You cannot actually just print free money, issue free money, and charge nothing for it. In Denmark, they have the first negative interest mortgage now. It just doesn't make sense. As I said, it defies all the laws of nature. And if you have maximum debt, which the world has today at 260 trillion, and you have minimum interest rates from anywhere from negative to 1 or 2%, just doesn't add up. High debts should mean a high cost of debt. But of course, central banks and governments have broken that relationship by just printing money. But normally, if you had a free market and no intervention by central banks, and by the way, I think central banks shouldn't exist, because I think they are just actually destroying the economy. But if you had a free market, then if people borrowed a lot of money, interest rates would go up, and that would regulate it automatically. Right now, we're not in that era. That's not going to happen. Central banks are not going to raise interest rates to 5%, 10%, or 20%. Remember, I was living in the UK in the 70s. I had, saw 15, 17% interest rates, and I paid 21% on my first mortgage in 1974 or 75. 21%. How many people can afford that today?
Well, let's talk about this. I wanted to ask you about this because you did live through the 70s, which was the opposite end of this spectrum. We had crazy high interest rates. We had runaway inflation. And many people have said that ultimately that's how this will end up. We will see high interest rates be forced to go up because of this debt problem, and we will experience inflation. Talk a little bit about what that was like, because when you talk about 21% interest rates on a mortgage, people can't get their heads around that. What is it like living in a high interest rate environment? How does it differ from this? Well, so this was in the UK. We're in Switzerland now, so this is in the UK. It's like everything else in life. It's a gradual process, and you get used to it. Of course, the interest on my mortgage initially was probably already 14, 15% or something like that.
So up to 21 wasn't that bad. We didn't start with 1 or 0.
Sure.
So made it more acceptable. But I to be honest with you, we weren't particularly concerned. My wife found an old letter she'd written to her mother back in those days, saying we're now paying 21%, but I think we're okay, she said. So we were actually, for some reason, we coped. Of course, there was high inflation also, because the two went hand in hand, of course. So there was very high inflation, and inflation was always higher than interest rates for most of this time, and therefore people got salary increases. Now there was a wage freeze for a while, but that didn't work. So I think it was just tough times, and of course in England at that time it was also because we had the oil crisis, we had the coal miners' strike, we had
IMF bailouts, we had all kinds of things, and
3-day week we had with electricity, etc. So it was tough times, and I joined Dixon's, a retail company, in 72, and got my first options at 135 pence. In 74, the shares were down to 10p. And I remember we as a management was saying, well, and the company wasn't suffering. The company wasn't suffering, was all doing all right. So it was really a question of just the economy, especially there was a retail stock, and the high beta factor, it dropped faster than the market, but this balance sheet was strong, was no problem. So, but anyway, as a management, we said that, God, this is never going to end.
Yeah,
this is going to be like this. We're going to go along the bottom now for years and years and years, because of course, but pendulums do swing, and they did swing back, and in the end, the company became a FTSE 100 company, etc. But in the meantime, there's shortages of toilet paper, there's shortages of candles because of the 3-day week. So of course people were suffering, but I think the British, they're hardy. Inflation in Britain was higher than anywhere else at that time, but they are hardy people, and really people were just getting on with their jobs. So it wasn't that bad, but I think it's different now, because now we're looking at a debt level which didn't exist then.
You said something very interesting there. You talked about the management believing that this would just bump along the bottom forever. Mm-hmm. And what we had then was tough times that eventually turned into good times. So I'm interested in how long it takes a mindset to change when you get one of these paradigm shifts, because what we have now, unfortunately, are good times, which will end and move to bad times as this all gets paid off. So just explain a little bit about how long it takes for the mindset to change from that we're going to be bumping along forever here to believing that things are actually improving finally.
But isn't this the wonderful thing with life? You are in a certain period, a good or a bad period, and if it isn't just a nuclear bomb that changes it overnight, but if it's a gradual process, we human beings learn to adjust to it in a gradual way. So it just happens naturally. All of a sudden, in that era, stock market improved a bit, earnings improved. And people were slightly better off. Inflation came down gradually. Interest rates came down gradually. People had a bit more money, could save a bit. Of course, it was great for savers at that time. Fantastic.
Yeah.
You could earn 15, 16, 17% on your savings. All right, inflation was high, but then still, that was a very good return. So I think it's the mindset doesn't change overnight. It's gradual, and therefore it's like seeing your children grow. It just happens every day slowly, and it's a process. And all of a sudden, you work as ever, you work hard as ever. You got that's what it's all about, really. I've always had on my desk, not right now, but I had always Churchill's words: "Never give in, never give in, never, never, ever give in." And I think that's, if you have to have that attitude and just fight on. And I think the English as a people have that attitude. They are a hardy people. So So it just happened gradually, and then you continue to invest, you continue to live your life, and things improved. So it is nothing dramatic. This time, I think it'll be a lot more dramatic,
right.
Because I think now we're coming from a massive level, a very high level of false prosperity. And that false prosperity is, as we discussed just now, the based on borrowed money, printed money. And then if you just think, Grant, since 2006, when the great financial crisis started, global debt has gone from 125 trillion to 260 trillion. I mean, that is just massive.
Yeah.
And none of that is actually comes from production of goods or services. It only comes from manufacturing fake money. So we haven't added anything to the wealth of the world except for fake wealth. And this is what I'm saying, that when this debt implodes, and I'm absolutely convinced it will have to, then the assets will implode also to the same extent. So the process that we will see in the next few years, however long that will take, it's taken longer than I expected, because we started with 2006 to 9. The financial system should have gone under then. They managed to save it. I don't think they will the second time.
So could you argue that central banks are doing the right thing in trying to keep this? Because the outcomes we're talking about here are not good, right? They're not good for anybody.
No.
Unless you have cash and reserves, in which case you'll have the opportunity to buy assets at very great prices, fire sale prices. So are the central banks doing the right thing here by trying anything they can to keep all this together?
No, they're causing this problem. They're not doing the right thing at all. I mean, they're the ones who caused it. If we accepted the normal cycles, economic cycles, and the supply and demand cycles, then the economy would have tops and bottoms, but they wouldn't be at these levels. You wouldn't have these massive speculative tops that we have now, that we had 2000, and you wouldn't have the bottoms that we are going to see in the next few years either. But because they have basically ruined the financial system by blowing it up to a level where there is no remedy now. So in my view, they're doing a horrible job, and all they're doing is creating power for themselves and the few people who stand nearest the money, which is the bankers and some of the people who can take advantage of the money, the big investors, etc. Normal people are just getting more debt. They're not even aware of how poor they are, normal people, because on top of their normal credit card and housing debt and student debt or whatever, of course, they actually have, in theory, the whole burden of the global debt, that especially the national debts of all the countries that are all increasing exponentially. But people don't understand that actually they should have to repay that one day. Of course they can't, and they won't, therefore. So now, sadly, I mean, I agree with many people like Ron Paul. The central bank should not exist, in my view. Their function that they're performing is actually destroying the financial system.
Well, look, here in Switzerland, we have a Swiss bank that's doing extraordinary things. I mean, they are creating money out of thin air, like a lot of the other ones are, but then they're turning around and buying US equities with them. The Swiss National Bank is now one of the biggest hedge funds in the world, essentially. Has that really dawned on the Swiss people, who are very conservative by nature, the extent to which their central bank is perhaps corrupting the bedrock of Swiss society by doing this?
I think Switzerland as a country, I lived in many countries, and of course I am Swiss. I was born Swiss, but I was raised in Sweden. I'm also Swedish. But Switzerland politically, in my view, is still the best country in the world, by far. You have this self-determination, more or less, in the cantons, and they get most of the tax money. The central government, nobody cares about. The president changes every year, and nobody cares who's the president. You have these referendums where if you have 100,000 signatures, you can change any law or implement any law, and that becomes part of the constitution, whatever is voted on, if that's accepted, becomes part of the constitution. No government, no parliament can change that, only another referendum. And that's, that is real democracy. So Switzerland functions very well in that aspect, but when it comes to the central bank, I think it's scandalous. As you say, they are a hedge fund. Their balance sheet is now 20% above the GDP, Swiss GDP, and they are the biggest currency speculators in the world. So they're buying mainly dollars and euros, and they're buying some US stocks also. I mean, that is absolutely scandalous in my view. Before, Swiss National Bank used to be a conservative bank, and like all Swiss banks, but that has changed now. And now, as you say, the bankers who come in and run it are now hedge fund managers. I lived in Switzerland from 69 to early 70s. And then, followed obviously because I've always come back to Switzerland and had a place here. But when I came to Switzerland, the Swiss franc was to the dollar $1 4 Swiss francs 30. Today it's roughly 1 to 1. So that's an 80% devaluation of the dollar against the Swiss franc.
The Swiss franc was largely backed by gold.
Yeah, I mean, they had a big amount. They have several thousand tons of gold, which sadly has also been reduced dramatically later on. And then to the pound, because I moved to the UK, it was £1 10 Swiss francs, and today is £1 1 Swiss franc 25. So the point I'm making is that, and there was no intervention by central banks. There was no money printing. There was no way, because now the reason the Swiss Central Bank or Swiss National Bank are doing this is to keep the currency low. Right. They want a low Swiss franc against the euro. And that's why they're selling Swiss franc, buying euro, buying dollars. But at that time, they just accepted whatever level the Swiss franc took, and that so. From early 70s to 80s or even today, Swiss franc has appreciated the whole time. But the economies cope with it because there's been no inflation. When the UK had inflation of 15-17% and the US had high inflation in the 70s, Switzerland still had no inflation because the currency was strong. So that was the way they ran the economy then, the central bank, and that's the way to do it. Because a country with a weak currency has always been a weak country. You never benefit from a weak currency as a country. I think times have changed because, unfortunately, I agree with the principles of that, but when you talk about you never benefit as a country with a weak currency, right now, if you have a strong currency, it's a huge problem given the deflationary environment that we live in. Well, you are right, and of course there are periods when you can manipulate the currency and temporarily take advantage of it. And you look at what has happened in Europe now. So you have one currency which doesn't work. It's ridiculous. All these separate nations, some are suffering dramatically, and some are prospering. We all know Germany, of course, has benefited massively from a very, very weak euro, and therefore their export industry has boomed now for the last couple of decades, turning down now. But then you have Italy, Greece, Spain, even France. Those countries, the currency is too strong. The euro is too strong. And they can't export. They can't, especially Italy and Greece, of course, and Spain. We have now with the euro an artificial situation. That's not real because it's manipulation. Sure, they can work when you have manipulation, but free-floating currency is the only way because that reveals, the actions of the government or the bad management or the deceitful actions of the management. of the countries or of the central banks. So, I mean, yes, short term you can benefit from a weak currency, but long term it just doesn't work.
Well, let's talk about Europe. You brought Europe up, and it was something I wanted to get onto. So we have an incoming president of the ECB, Christine Lagarde, who is a lawyer and a diplomat / politician first and foremost. Mario Draghi leaves a legacy of doing whatever it takes to keep this project together. I would argue that ultimately that will fail, but time will tell. Is Christine Lagarde the right person at the right time for this job? And have they picked her because of her diplomatic and her policy skills rather than her financial skills to try and do the political maneuvering that is going to be necessary, I suspect, to try and keep this thing together?
You know what? I think she will be the most powerful person in Europe and one of the most powerful persons in the world. Because, as you say, she's got the political influence and background, and she will rule over a region that needs to print more money than ever before. Yeah. And she will use that power, and basically she's already telling off the Merkel and the Prime Minister of the Netherlands, that they should spend more money, lower the taxes, change fiscal policy. And I mean, she's going to interfere in all countries. She's going to make money from the ECB, which they will all need. Germany is going to need unlimited amounts of money, because when the Deutsche Bank and Commerzbank get under real pressure, there will be a lot of money printing. And she will have the power to tell them exactly what they should do in their domestic political situation. And the ECB has done that before with Greece and Italy, and changed prime ministers and presidents, etc. And now she's going to take that to another level, in my view. I wrote an article back a few weeks or a couple of months ago, comparing August 1971 to August 2019. Because that was that's what the time when they started hinting about, we will do what it takes. Draghi said again, I said it a few years earlier, we will do what it takes to save Europe, basically, he said that. And there was a clear indication of money printing or QE coming, and a clear indication of that there were problems in the world. And then a few weeks later, the Fed started with the same thing. At the, I think it was the beginning of August or the beginning of September, the Fed started making the overnight repos to the extent first of 20, 30 billion, and then it increased to 100 billion. And now they started the bi-weekly ones that are now up to 50 billion, and they have now come in with what you and I would call QE. Of 60 billion a month they're starting. So in all now you're talking about 100 billion basically they're flooding the system with. This is serious. This is more than any. One of the governments of one of the federal banks in the States called it plumbing.
Yeah.
And I said, of course it's plumbing, because the system is leaking like a sieve. So it wasn't Q, it was plumbing. They don't want to call it Q. It is money printing in whatever you want to call it. It is a form of money printing, and it's bigger than ever. So there is a problem. We don't quite know if the problem is, or I don't know anyway, if the problem is with the US banks from the Fed's point of view, if JP Morgan and Goldman Sachs, etc., because we know JP Morgan, they were bust before. They have the biggest derivative position of any bank in the world, JP Morgan. And they could easily be under pressure, as well as Goldman Sachs, as they were in 2007-8. What I'm saying is that's why I'm comparing it with 71, when the gold backing of the dollar was cancelled, and from that we had this massive escalation in debt and inflation. Now, I think what they're indicating now is the beginning of a massive period of money printing, QE, whatever you want to call it, because there are problems in the system. It's absolutely clear. And, you know, so I think this, what we've been expecting, you and I, that the markets are going to, bubble markets are going to implode, and money printing is going to increase dramatically, and it will have an effect on currencies, and therefore gold will reflect this also. So I think this is starting now, and it will accelerate. You know, I'm concerned, of course, about the whole of the derivative bubble. I mean, I still think there is 1.5 quadrillion derivatives officially. They halved it to 600 trillion or so, but it's actually, I think that was just bookkeeping. I think the gross amount outstanding is still in the quadrillion. And you know, liquidity in derivative works when people are buying, and banks are making fortunes.
Sure.
But when people are selling, there will be no liquidity whatsoever, and there will be no one standing on the other side, you know, to pay for it. So, you know, I think that a big part of these derivatives could easily become printed money in coming years. And then you're into the quadrillions of printed money. I know it sounds dramatic and exaggerated, but it's a fact. When counterparty fails, you know, that derivative, there's nobody standing on the other side. Therefore, the only solution is either to let the banks go under, or that short-term governments or central banks will print money. That's not a solution, of course, but that's the only thing that they know short-term. How
should people be thinking about this? And what realistically can people do to protect themselves from this? Because it's arcane, and people don't really understand the plumbing of central banks and how the system, you know, we always talk about the system, how that works, because it's a very complex thing to understand. But understanding that there's too much debt in the world is much simpler. Understanding that we can't print money and give out free money and be prosperous is something people can understand. So can we do anything to avoid this? Because it feels inevitable the way you talk about it.
I wrote an article many years ago called Deus Ex Machina, God out of the machine, and then I had an illustration showing that how all the central banks were crashing, all the countries were crashing, all the one after the other, Greece, Italy, Japan, US, etc. And the central bank was standing down there like firemen trying to save them. But and I said I think that today there is no solution. I said already then, the only solution is Deus Ex Machina, that, you know, somebody lowers God on the stage, which was happening in the old Greek plays, and he solved everything. I don't think that's going to happen. So I think it's gone too far. I don't think there's any chance. I mean, they're going to create a new currency that will be most probably, and everybody's talking about it already, there will be a crypto national currencies, crypto dollar, and they will fudge it in a way that it sounds like the debts disappear and it's in the old dollar, and now we have the crypto dollar, and a lot of central banks will do this. BIS are talking about it also, IMF, etc. So that's what they're going to try. So that is, if you want, they're trying to do an orderly reset. I think that will fail. So that will last for a little while, but you can't make the debt disappear. You can pretend that you made it disappear, but it won't disappear. So it'll come back again. And you have all of these holders of all of these bonds around the world, government bonds. At some point they will start dumping the bonds, and China, of course, are in a wonderful position that if they really want to upset the US, they can dump their 1.2 trillion US debt. I know it'll work against them, but probably they built up so much gold so they don't care.
Well, probably. But so you bring up gold. What role does gold play in all this? Both in the working out of this massive debt overhang, in protecting savings. Where does gold fit into this puzzle? Because it's obviously a key part of it.
For 99.5% of people in the world, it plays no role at all. They don't understand it. The governments don't really want to, in any way, talk about gold or the benefits of gold or why you should have gold. I often mention that. You take Greenspan, before he became chairman of the Fed, he talked about gold all the time, virtues of gold. Gold was really the only way to back the monetary system. When he became chairman of the Fed, he put on the political hat. He never mentioned gold. And now again, he talks about gold all the time. So that's the problem with governments. Because they are committing these, what I call deceitful acts in destroying the economy, destroying the value of money by just printing unlimited amounts of it. They are also suppressing anything about gold, because that way people are not seeing what's happening to their money. We both know that all paper money has gone down since 1971, when the gold window was closed, gone down by 97 to 99% against gold, and since 2000, virtually all of the currencies gone down 80% against gold. Nobody knows this. Nobody understands this. Gold in this century has been the best performing asset class. But the papers don't talk about it, and governments don't talk about it, and therefore most people are not aware of gold until they come to the front pages or on television in the media, and therefore nobody understands gold today. You and I have talked about gold for years and years. But so we're fortunate that we have a group of converted that we can preach to, if you want, and tell them the virtues of gold. And gold is actually, the only money that has survived for the last 5,000 years. All other money has always gone to zero. But the people don't understand that. So therefore, nobody owns gold. And we're trying to I feel passionate about helping people. To actually hold gold, and we're doing that. But ordinary people will only buy gold when it's on the front pages and when it goes up. Like most investors do, they buy when it goes up. But take the example of Venezuela.
Yeah.
If these people, they could have bought gold for nothing at the beginning of this century. So it was the same price as in US dollars. So there was $200-300 an ounce, and they could have bought a small and 10 grams of gold for a few dollars only. Now they have no money, they have no food. If they have just bought for a few $100s at that time, it would have saved their lives. I think we are going to see a similar thing happening in the Western world. I think we're going to see currencies going to zero. I think we're going to see high inflation, hyperinflation. It'll take time, but once hyperinflation starts, it goes very quickly. And therefore, I see gold as the best protection against what's going to happen to money and to the financial system and to the banking system. I don't want to be a prophet of doom and gloom, because I'm an optimistic person. But at the same time, one thing I've learned in life is to analyze risk and protect against risk. And this is what we would, more people need to think about that. But, we can't, the 0.5% of world financial assets that are in gold today is a ridiculous amount. And much too small, and people at some point, and too late, most people will discover it when the value of the money is a fraction of what it is today. So coming back to your question about what is the solution, I don't think there is a solution, and that is what is so sad. The world is going to go through a period of a corrective period, which will be devastating for a lot of people.
What does that look like, though? Because we're talking about hyperinflationary periods here. It could also be a deflationary bust like we saw in the 1930s. How do you think this plays out?
The scenario I see, because to some extent we will have inflation and deflation simultaneously. So we will have inflation when it comes to paper money will crash in value, and therefore a lot of goods and services the cost will inflate automatically in paper money, and therefore most of the bubble assets that we talked about before, stocks and bonds and property, they will deflate in value. So that's a deflation. But then as the cost of goods and services and foods, etc., will be reflected in the value of the money. So they will go up in price. So I see initially, so there'll be a combination of some values going crashing. You will have an inflationary, hyperinflationary depression, which means that some values will go down and others will go up dramatically. So, but I think, as I see, then there will be when you look at the value of your money, which will decline all the time, and you will need to print more and more money. That will be inflationary, and that is so that's hyperinflation in my view. At some point, then, when they printed lots of money to try to save the system, and this money printing is inflationary, then I think the world will realize that this has zero value, all this debt, and the weight of the money and the weight of the debt will basically crash the system. And then we will have a proper deflation in all areas of everything, which will, of course, affect banks, because the assets of the banks will become worthless then also.
What about this idea of you talked about Deus Machina, but what about this idea of a debt jubilee? Does that offer any kind of solution somewhere?
It's not a solution, a debt jubilee. I mean, there are many ways that they will try to manipulate this by, for example, say they can write off the debt, but you cannot write off a debt without that affecting the assets on the other side, because you have the balance sheet has two sides, assets and liabilities. And if the debt is written off, it means that all the asset prices are going to crash too, which means that all the banks that will come under enormous pressure or not survive, means that people will not be able to pay for their houses or their house loans or their other loans, etc. So I'm sure they will try, the authorities or the governments or the central banks, they will try an organized reset and with a temporary debt jubilee and all of that. I don't think it will last. I think that will be very temporary, because the volume of debt will make it impossible to last, because you can't make debt disappear without making the assets disappear at the same time.
So what's ultimately, when the smoke clears, what does the world look like, and what are the opportunities? Because out of any chaos comes opportunity.
Of course. Yeah, I mean, sadly, a lot of people will suffer, like we're seeing in Venezuela now. I hope it won't be that bad, but the risk is that it could be pretty bad for a lot of people. Let's say that there are no pensions, there are virtually no social security, there's no social security, etc. So it'll be a tough time. But when I look back at history, and history is such a fantastic thing, because the world is still here, people are still here. Some people, obviously, there will be probably more people dying of starvation or empty stomachs or maybe wars, etc. But the world goes on. I mean, I always take, I could take many examples. I always look at Eton, for example. It's a school in the UK, very famous school. It's been around for over 550 years. It's a private school, so people have to pay high fees, etc. But it's been around 550 years through revolutions, wars, depressions, high inflation, hyperinflation, all of that, and they survived. So, the world survives, and there are people who have lived in war zones their whole life and survived. Human beings have an incredible ability to adapt. And that's what's so wonderful about it. So we're not going to live in luxury that a lot of people are doing now, or have the affluence of cars and going on holiday to wherever people go, to Caribbean, Thailand or whatever. It's going to be a normal life again, like I had when I was young. We didn't have all of these. You had to have, cars, or taking a year off after your studies and traveling the world. So, before my generation before, they went, the day they finished school, they started working.
Right.
So, and I didn't have a gap year or anything either. And I started studying first and then started working straight away. All of those luxuries will disappear, and there's nothing wrong with that because this has not been a normal period in history. So it will be different for people. But, people will continue to work hard, eat less. We'll lose some of this that we don't need. And we'll probably feel healthier. And some people will starve, of course, but overall, the world will continue. And how long it will take, who knows? I think this is the end of a big cycle. Whether it's a 200-year cycle or a 2,000-year cycle, only the historians will know afterwards. So therefore, after the Roman Empire fell in the 470, roughly, the last bit of the Roman Empire fell. Of course, you had which we only knew about afterwards. We had the Dark Ages for 500 years. But it wasn't like the world went under for 500 years. It's just like went down to a different level, and then people lived more frugally, and there wasn't the same development until then. The Renaissance came and they changed it again. So I think that's whether we will have a long period or not, or if this is a cycle where we will have a long period of downturn or just a shorter correction of a few years or 10 years or whatever. We will only know afterwards, but I think there has to be a period of adjustment, the only way the world can continue to grow, in my way, is to get rid of the debt, and since it can never be repaid, it has to just implode. And as I said, if the debt implodes, so will the assets that the debt are backing. So everything will come down to a different level. But that's we need that to get the green shoots coming again. Now, there's no chance for the world to continue to grow with 260 trillion of debt plus a potential another quadrillion or so if all the derivatives blow up. There's no chance for the world to continue to grow soundly with that. So it has to happen. It's only a question of when.
Well, look, I would never ask you the when question because that's the unknowable question, right? None of us know that.
No, of course not.
We know it every day. It gets closer because that just makes sense. But when there's imminent and there's inevitable. It's inevitable for sure. Is it imminent? Do you see it happening? In the next short period of time, or is this something that you feel we could push this out several more years? Because it feels to me now that that's what the best case outcome is for the central bankers and policymakers, is that we can push this out maybe 4, 5, 6 more years, maybe, and perhaps a solution presents itself. I doubt it, or do you feel that now this is becoming a clear and present danger to people?
Well, I've been wrong before. I was wrong after the 6 to 9 crisis. I thought it would happen then. I didn't expect us to sit here 10 years later with all markets at peaks. The stock markets, bond markets, property markets, all asset markets at peaks. I mean, I've been right because when it comes to gold, we went in there and advised people to go into gold in 2002 already. So I've seen the direct, and that was obviously again for risk protection, if you want, or insurance. So we've been right on that, and of course gold has had a up and down journey, but the trend has been strongly up since then. But I didn't expect the economy to survive for such a long time. So therefore, you're right, it's very difficult to predict exactly. But at the same time, short-term timing, you can have the sentiment, but things can last a long time, as we've seen. So sentiment is a dangerous thing to measure it by. But technically, it looks now like stock markets are finishing a very, very long-term secular bull move, and that could be. It could be at the end of this year, before the end of this year. It could be early next year. That's what it looks like. Wouldn't put all my money on that. From the point, I wouldn't bet on that. But what I would bet on is to say that protect yourself now for this happening, because when the stock market falls, then right now the gold and stocks have an inverse relationship. So therefore, when stocks fall, gold is going to make the next move up again now to new highs. in dollars, which it hasn't done, but all other currencies are already new highs. But also at some point, I don't know when the bond market crash might come a little bit later, because they might succeed in printing and lowering rates for a while still. But if stocks crash, other things will follow. It's only a question of how long it takes. So it could happen now, but as I said, in theory, because like it did last time, they could push it forward again and kick the can down the road. But I think now the printed money that has been made in the last decade now, and the massive increase in global debt, as I said, doubled global debt, I think it's now coming to a point when there's going to be a zero return on additional money printed. And the world will see that, and therefore the weight of the debt will actually be the thing that makes it all come down or collapse or implode.
Well, look, it's a bleak outlook, it has to be said. But people often say, well, this is all doom and it's gloom and it's all this kind of stuff. And you are an optimistic person, but unless people understand the magnitude of this, they really can't be in a position to try and stop themselves suffering the worst of it, which will be, as you pointed out, really bad. When these things happen, when these epochs end and they turn the other way, they create chaos. And it's only really by understanding them that you give yourself any kind of chance at all of navigating them in the best way possible.
No, and so we help people with protecting their wealth by owning physical gold. But that's a very small part of what we're looking at today. At least if you do that, you have a chance of financially coping with the times to come, because gold price will reflect all of this destruction of paper money, and therefore gold will go up. But there's so much more to it than that, because you're going to live in a society which will not be very pleasant to live in if all of this happens. So you've got to think about the most important thing, in my view, is organize your financial affairs to whatever extent you can, and then you have to have. It's important to have a circle of friends and family, because that's what's going to actually make you survive in coming years. If we go back to the most important thing in life, which is on the kernel of society, which is family and a small group of friends, which has really disappeared now with the internet and social media, etc. If you get back to that, that's what's going to take you through a difficult period, in my view, much more, because you see in Greece and all of these countries that are suffering now, families stick together, and that becomes a self-supporting system. And I think that's the most important thing in the next few years. And in the meantime, before this happened, enjoy life, because it's, we're here for a short time. So why not try to enjoy it? You can have fun. There's so many free things in life. Nature is free. Having good conversations is free. Reading is basically free. So now we're basing too much on money, and I think it will be there are many other values that people start thinking about.
Well, Egon, my friend, it's always fun sitting and talking to you. I mean, you and I have talked about some pretty dark stuff, but it doesn't mean there's no light at the end of the tunnel. And I always enjoy sitting down and chatting with you. So thanks for having me here in Zurich.
Thank you, Grant. I enjoy it too. Thank you. Always nice to have you here in Zurich.